There we go. Good afternoon, everyone. Welcome to today's Trading the Markets Live with the Live Trade Room. So this is where we look for high probability trading opportunities during the US session, where we look to have a comprehensive understanding of price action. So we look to identify some high probability trading opportunities. Then we go through the process of executing that trade in a very consistent, disciplined, and occasionally a very, very patient manner. And then our attention shifts to our ability to manage that trade effectively, something most traders really struggle with in terms of should I take profit, should I not, should I book in, should I mitigate the risk on the trade. You know, a lot of that indecision can be very detrimental to any particular trader trading these markets. So we'll go through that, and all with one reason, and that is to generate consistent returns when we trade these markets. So without further ado then, if I can just draw your attention to our risk warning. And today now is also, and it's worth noting actually, guys, that today is the 31st of July. Not only is it a summer month, so we now have our bankers and politicians all going away on their holidays. So there's less fundamental drivers in these markets. It's not to say that price won't move organically or technically. It's just the drivers behind those moves are necessarily not the most aggressive at this time of year. So there is often a bit of hesitation when we trade the markets at this time of year. Plus, it's the last day of the month. So what you might also see is your big the big players in this environment looking to take profits on moves. So you might see price action that doesn't necessarily behave in a particularly coherent manner, but we will look to identify the situation, what's effectively occurring in these markets with each independent market as we go through them. So so without further ado, if we could just start with, if I could find my mouse, that is, just our risk warning. Just obviously, please do familiarize yourselves with the risks involved in trading these markets. Okay, so before we begin, what's useful to do is to have an understanding of the news flow. So we'll have a quick review of potential market moving news. And for this, we use Forex Factory. and you're welcome to use whatever news platform you like. We just like the nature in which it's laid out. Gives you the time frame, the currency that it impacts, the actual impact that is expected. So really we're looking at the red, the significant high impact news events, and they're easy to identify on Forex Factory with the red factory. And I suppose the big news of the day, sort of so far really, would be with the Bank of Japan. And they kept the policy rate exactly the same, and what we've seen is a little bit of yen weakness creep into the markets as a result. So I suppose the Bank of Japan still want to achieve their overall inflation targets, and they're going to look to include certain measures, largely with regards to forward guidance, to try and achieve their ultimate aims and objectives. So as a result, we've seen a little bit of weakness creep into the yen, with the potential for increased weakness very, very likely. And if you want to read a little bit more about what's going on with the Bank of Japan, there's a number of articles there, just very useful to just give you a little bit of an understanding in terms of the stimulus and the objectives behind the Bank of Japan and Kuroda. Okay, so obviously central bankers are very, very important, not just for interest rates, but for monetary policy reasons. So when these central bankers do talk to the markets generally listen, and as a result act accordingly. So we're getting a bit of yen weakness in over the course of the day. We were discussing with our traders this morning to look for some continued yen weakness, so we'll come on to that very, very shortly. So in addition to that, we've had a GDP figure, which is a monthly figure, better than expected, looking at the CAD, and we'll have a look at the dollar CAD in some detail in a second. There's ongoing negotiations with regard to NAFTA, the North Atlantic Trade Agreement, and we'll see how that plays out with regards to the dollar CAD very shortly. But in terms of news for the remainder of the session, we really have a consumer confidence figure due out impacting the US dollar, and that's the only real thing in addition to concern ourselves. And these are over and above things like Brexit negotiations, for example, and also any further developments with regards to trade, any further developments with regards to the US and their relationship with China, Russia, and also Iran as well, the sanctions that have been placed on Iran. So there's a sort of a carrot and stick approach really, and it'll be interesting to see how things evolve, but all of these things have the potential to drive markets at the moment. Okay, that's just a little overview. So we'll be looking at the consumer confidence number impacting the US dollar, and what we're looking for as usual is a significant deviation. Of course, if consumers are confident, they're likely to buy more, spend more in the economy, and just feel better about the economy in general. And the opposite is also true, where if there's not so much confidence in the economy, then it restricts retail sales figures and home buying, you name it, has a direct impact, and of course that is then therefore no longer that great for something like the US dollar. Okay, so that's just a little overview of some of the news flow that we need to concern ourselves with. So let's go straight into the charts then, and we'll see what opportunities exist. Now, we were looking very closely. This is the euro dollar, and we had a really strong day, certainly in the earlier part of the day, but recently we've had a bit of a strong reversal, and actually this is now looking like a significant rejection of this 1749 level. And we've identified this level, and we have done for the majority of last week as well. And we're just effectively trading within inside this level. So this is a daily time frame, and as you can see, for probably the last month, apart from a couple of little moves to the downside, we've kind of been in between these two prices now for quite some time, and it looks like we're going to continue to remain within this sideways. So when we talk about trade selection or identifying high probability trade setups, we need either a break above 17.49 to the upside, or we need a confirmed break below the 16.38 level to the downside. So we definitely have this range to break through. So that's quite interesting for us, and we've seen the rejection of this level now, which is the 17.49 level. You can see the rejection there, and let's see how this market rolls out. But as far as a tradable opportunity, not quite. We definitely like to see price action behave in a much better way than what we've seen. We're seeing some dollar strength just creep into the market slightly. When we go over to the dollar yen, you can see that we've had a really strong explosive move to the upside, and we'd actually expect this market to continue higher. So this is a market that we're going to look at. We've had a really strong breakout above the highs of last week. So we're getting that nice strong move to the upside, and we'd like to see this market pull back to the 111.54 level. We're currently at the 111.79, so there's about a 30 pip pullback effectively, which we'd like to capitalize on. But we'll take that into account when we go into the smaller time frames, and you can see this move just recently, just over the last sort of 20 minutes or so. So we have that opportunity there in the dollar yen. The dollar Swiss is just breaking out to the downside. We are effectively, and again, it's addressing the market conditions, and they're very much, from a technical perspective, very much sideways moving. So really, we want to see a little bit more before we get into these markets. Interesting situation in the dollar CAD. Let me just revert to a smaller term time frame. You can see the choppiness that exists. Yesterday we saw a low in and around these lows down here, which is literally the 130 level, and we've had a rejection of that level again today. So we gapped down. We were quite aggressive to the downside, as you can see, and we've reversed very quickly back up to the 30.55 level. So there's a 40 pip move to the downside, followed by a 50 pip move to the upside. So there's been a 90 pip swing in this market in a very short period of time. So it just remains to be seen what the best course of action is right now. We'd rather apply a little bit of patience to some of these markets just for the short term, and we'll see how price action behaves around these levels. So looking for a breakout above the 30.97 to the upside, and to the downside we'd be looking for this market to break below the 29.90 level. So really, while we're in this range, and we are, technically speaking, we are what's called below a structural failure to the downside, where we've no longer looking for opportunities to move higher. We've extended lower, so actually now a bias should be to the downside against the dollar CAD. However, the dollar CAD is in an unusual phase at the moment. I mean, I suppose the same as with a lot of these markets over the last number of weeks. You can see the sideways moving side patterns in these markets, which make them very choppy markets to trade. So that's the New Zealand dollar. The euro pound now. We do like the idea of this market above the 89.19, but we just want to draw your attention to the level of resistance in and around these levels is pretty significant. So when it comes to the execution, we want to determine whether there is the potential risk reward to the upside, and whether the overall setup is of high probability. And the answer to those two questions is no, we don't necessarily get the risk reward to the upside, and is it high probability? It's kind of marginal, to be fair, but not as high a probability trade setup as we would like to get involved in. So again, a little bit of patience is required with that. Now, we've seen and experienced a lot of yen weakness, and that's very much likely to continue. So we're looking for opportunities. Like today, we're looking for opportunities to buy above the 130.07, and this market has really motored on to the upside. So there's been some great opportunities over the course of the day. And again, with the pound yen, the 145.91. Now it's just a case of looking for those opportunities and being nice and patient and waiting for those opportunities to arrive. So we've had this slow grinding price action moving to the upside all day long, and we're now at these highs as things stand. So we'll have a look at the yen pairs, definitely. So we'll come back to these very shortly. So slightly different technical setup, but we're still pushing very close to those highs there. So another market that we do quite like to the downside, I'll just take away a couple of these for you. Is the gold market. There's a really strong impulse to the downside, and we're getting that impulse again. So looking to sell this market below the 12.1778 is very much a viable opportunity for us. So we shall look at this market as well in the smaller time frames and see. You can see that the large swing, the volatility in the last 45 minutes or so. It's been quite significant, where we've had a move up to 12.25 and then a reversal down to 12.14. So that's quite a strong reversal. So so we do look to capitalize on perhaps an opportunity for this market to move to the downside. So we'll come back to these three very shortly. And to just finish off with the crude oil, we've had a complete reversal of yesterday's move to the upside. So we are grinding to the upside, but it's not looking good from a price action perspective, where we do have these levels of resistance in here around the 70.5 level when we look at the oil market. Now, we just hope that this market doesn't continue to grind higher in this very choppy fashion, because it does make it very, very difficult to identify a very clean and concise opportunity. However, we'll continue to monitor it, but for now, there's no real need to look to take that trade. We've had a bit of a pullback. We're now currently below the 28.16 in the S&P 500. A little bit of indecision kicking in today. Same situation for the Dow Jones. We've had a bit of a rollover to the downside and a little bit of support in around these kind of levels, but we are now technically below the 25.371 level. So we are potentially getting a little bit of a breakout as we look at this to the upside. Okay, so there's a bit of strength coming in. We have the US Open in about 6 minutes, so it might be a preliminary move in a result in these markets in the build up to that move. So we'll keep an eye out. The FTSE has seen a nice explosive move today. It's been threatening this for the last few weeks, but you can see how poor this price action has been from a tradable perspective over the last few weeks. Maybe a little bit of sort of consistent price action might be called for. We do have a strong level of resistance in around the 77.93 level, and we're not that far below it. So really, if we were trading this, and certainly if you guys were trading this, you'd need to capitalize on a pullback and see if you can trade that comprehensively. But very difficult, very choppy market to trade. We do have this supporting level just in here, expecting these markets to push higher. So a bullish day today, but an uncharacteristically bullish day, and it'll be very interesting to see if we get continuation tomorrow, actually. And let's see, do take note of the close of this market and see, because what has happened over the last number of weeks is a really strong pullback, and I wouldn't be surprised if we experience that again. Okay, so that's kind of just a generic overview of these markets. Now we've identified some hopefully high probability trading opportunities. The first one is looking at the gold market, so we'll keep an eye on that on screen, top right. Bottom right, we're going to have a look at the pound yen, and we'll put the euro yen just bottom left, and finally we shall look at the dollar yen. With a bit of strength coming into the US dollar, we might get some opportunities in these markets. So we can see that we're making new highs in the euro yen, the dollar yen, and the pound yen. So very likely to see these markets continue. What we need to do is to just wait for the pullbacks now, and be nice and patient, and perhaps don't be jumping into these markets at these high prices. Wait for the market to pull back, find its own level wherever that may be, and then we can make a trading decision whether we get into it or not. We've had the move lower, we've had the really strong swing in the gold market followed by a 50% retracement. So really this market has a major question mark over it. But actually the price action in all the yen pairs are very, very similar. So we can keep an eye on these levels in here. We'd like to see this price action pull back to 130.94. So we're only talking about a 10 pip pullback from these highs, and then it might give us a tradable opportunity. And now we're back at that level, at that same kind of level in here on a 15-minute price chart. So let's see the close of this chart and see what opportunities may arise. So of course, if you guys do have any questions about anything covered, or if you have anything to add, or certainly any charts that you like to look at, do post that into the chat box. Okay. So do locate your chat box on the right of your screen there, and you can and that will come through to us, and we'll be happy to answer obviously any questions you want. Now I'm looking at the euro yen and the pound yen. Let's see what happens to this market when it closes in the next minute or so. So what I'm going to do is I'm just going to see this little pullback, and that's really what I'm looking to trade is the pullback in that market, and we're getting to see the same. So what we'd like to see is both of these markets find a little bit of floor just at these lower prices, and see if it will give us an opportunity to take this market to the upside. So we're going to reduce our risk right down, just because it's summer markets, and it's not necessarily worth holding out for massive, really strong big winners. The other thing that's worth taking on board is understanding how much these markets have already moved today, and that might allow us to redefine potentially what we're looking for in these markets. So let's have a look at this on a much smaller time frame as well. We also look at psychological levels in these markets. So the euro yen has the 131.100 level, which is it's struggling to break this. Which is struggling to break this this level to the downside. You could see that the 147 has just seen this market just roll over. Okay, I'm looking at the euro yen very carefully. I just want to see how it's performing against mild bit of strength coming back into it, but nothing of any significance. Okay, so I just wanted to see what's going on with the dollar yen. So we're getting what's called a structural failure in the gold market. So, you know, this long rejection of the 125 back down to the 1214. I mean, this is just very, very choppy, erratic, very difficult price action to trade. So because that, we're going to just back off just a little bit. Well, I'm not really looking to take both of these trades, but I am looking to take one of these two, and it's not really moving to the upside with any great conviction. A break beneath this level here in the dollar yen would be a structural failure to the downside. So maybe looking for this price to come back to 111 is the better trade idea for the dollar yen. We'll see how this market performs. Okay, so let's get into okay, so let's take we're just taking a small 1 mini lot trade in the euro yen. Now we do have this low sitting in here, so we could have a very, very small stop loss in this trade, and that's effectively what we're going to do. We're just going to have it below the 130 level. So the 130.97, because what we want to guard ourselves against, which is why we're only looking to take one of these trades and not necessarily two of them, is because they're both setting up for structural failures to the downside, or potentially. That's some of the short-term concerns. So we've got, sorry, let me put these levels in. So what we're hoping that doesn't happen is that we get this market rolling over below the 130.98, breaking through the 130.100 level, because that will be a structural failure to the downside then, obviously, if that occurs. Let me get up my pens, just show you. And the same with the pound yen. So we're only taking a 9 pip stop loss in this market. So it's more of a test trade, let's say. We're still trading it in the direction in which we want to trade this market, which is the upside. It's still taking on board a lot of the fundamentals behind the yen market, which are weak. There's definitely the interest in the Bank of Japan to make the yen more affordable. So there's aspects of devaluation built into it. So the trade idea is fine. The technical setup is okay. We're looking to trade the pullback, which is what you should be looking to do. But now what we're wanting to avoid is a structural failure to the downside. So that in the euro yen is below the 130.98, below the 146.79 to the downside in the pound yen, and in the gold market as well. So that this structural failure has already occurred in the gold market at 112.20.09 level. So that's the structural failure where we fail to make a new low and we get that reversal price action. So that's already occurred. So now we're no longer looking for an opportunity to sell as things stand. If we get the price action stacking up for us the way we would like it to, and we kind of want to trade these levels of support and resistance, because what adds to our case. So now we're in a precarious position, but if we get a break above this level, then obviously this becomes a bit of a floor, a really strong floor in this market, and what we'd be looking for is to see these new highs. Same situation, if we break above this level, it might mean that we get more buyers coming into this market at this level, looking to push prices higher. So we'll just have to wait and see. We've just taken a fairly straightforward 9 pip trade in the euro yen, all for the right reasons. We just need the technicals to follow through, and for this price to really stand up and stack up for us. There's one aspect of price action that's worth considering, and for that you need to sort of have a look at the bigger time frames, is look at the size of the move that we've experienced today. So really, when I ask you what is your potential for a positive outcome, having seen this sizable move already today, I mean, I'd be interested to put that question out to you guys as well, if you would like. We really want to capitalize on a pullback, and just maybe look to take you know, a relatively small winner today in this market, just because of the size of the move. And one indicator that you can use that can help you and assist you in understanding the range of a market would be an average true range indicator. So for those of you that trade MetaTrader 4, you can locate an average true range indicator. You can work with a 20 period, and what this does is it tells you over the last 20 days what has been the average range, and you can see for the euro yen it's been 0.78, so that's 78 pips is the move, and you can see how it's devalued somewhat as we've entered the summer months and the summer weeks. You can see the volatility drop right off. Now it was quite strong up till the end of June, and we've seen this fall off as a result. Not overly surprising, but if you can imagine, if the range on average at the moment in current market conditions is 78 pips, and we look at today's range, so we're taking the high, which is the 131.15, and then we compare it and contrast it against the low of 129.68, you can take the bigger price minus the lower price, 147 pips, isn't it, the range from high to low. So that's worth taking on board, because it is literally twice the average true range. So we need to sort of bear that in mind when we look to take these trades. Hi Mike, good to have you back again. What are your thoughts on going long on the Euro Swiss? Let me have a look at that for you, Mike. So we can bring this right the way down. So we understand there that the range, so we're already currently trading twice the range. And of course that does impact your potential for a positive outcome. And it does across all of the dollar-yen pairs. The reason why we're trading it is because we've got a really strong fundamental backdrop behind the yen weakness, which is why we're cherry picking these trades more so than others. So we go down to the 1 minute time frame. So we've just entered this sideways moving market just for the time being. It doesn't look like it's committed to either direction at the moment. Okay, so we're getting a bit of strength coming into the dollar yen. We do need to see this level be broken, so we need this market to push 4 or 5 pips to the upside. And let's see if we start getting structural failures in these markets, which is the only reason why I've just taken risk on one of these trades, just in case all of these levels break before the 146.79 to the downside in the pound yen, the 130.98 in the euro yen, and also the 111.73 in the dollar yen. That's why it's important not to necessarily get into all 3 trades at the same time, to stagger them, to get into the better opportunity trades. This market has the 131.100 level, which is a strong psychological level going for it, which is one of the reasons why I decided the euro yen. So we're okay with these prices just staying above the 131 level. So that's what we want to see. We want to see those prices just move to the upside, unless we get the structural failure to the downside. So really the focus of our approach is very much based in price action. It's understanding what price is doing. We do pride ourselves on being able to navigate the financial markets based on price action. Now we do take on board the fundamentals and we understand what's driving these markets, but when it comes to execution, it's purely done on a technical perspective, and that allows us to stay objective when we trade. So if we do our analysis and we look at the execution part and it all stacks up, we can actually take that trade without thinking too hard, without double guessing ourselves, and that is never a good situation for a trader to be in, where it's like for example, I just took the euro yen trade once it decided to meet the criteria for the trade, and I was happy to get into that trade. It was Jen just waiting to click the button and get into the trade. Now the reality of that is not that decision doesn't always have to be correct. In fact, there'll be times when those decisions won't be correct. But when you can get into these trades and they're fast moving and they get explosive moves, we can really look to stay into those trades for as long as necessary, and capitalize on some really good strong winners. The only problem is, we're in summer weeks. Some days we haven't really been able to take what's called high probability trade setups during the sessions. We've actually the signals were generated perhaps earlier in the morning or later on in the evening, and those are just the market conditions in which all traders have to deal with when they hit their trading desk. Like, you can't guarantee liquid markets all day long. Sometimes they do go to sleep. They do prefer to just move sideways, where there's the commitment of others is fairly limited. So you've just got to accept that as part and parcel of trading these markets. Hiya Mike, sorry, I shall get back to your question just regarding the Euro Swiss. And we're just beginning to see this price just roll over to the downside, as you can see. So ironically, we're seeing the pound and the dollar strengthen a little bit, but not so much the euro yen. Let's have a look at the euro dollar just quickly. Yeah, well, some dollar strength has come in fairly recently over the last few. Yeah, my pleasure, Mike. Sorry, I did get distracted. So yeah, let's go and have a look at the euro yen. Okay, so sorry, Euro Swiss, wasn't it? Okay, sorry, let me get this up on screen. The Euro Swiss. There we go. So do you mind me asking you, Mike, are you looking to buy, sell, or are you waiting to take a particular trade, or perhaps you're already in a trade? Do let me know, Mike, if you can. Are you looking to buy this market or sell this market? Do let me know. So we'll do a little bit of technical analysis on this market. So we can see the massive move on the 15th of January 2015. A major event really for most traders trading these markets. One thing I'd like to do is to just identify some levels. So I just noticed one more thing. So there's a little bit of support around these lows, but let's go back to our support and resistance levels. These are more. We'll just change the color here, Mike, just so we don't confuse you. So the blue levels are really strong levels of support to the upside and to the downside, and even recently we can look at these levels in here and just see how the market behaves around those levels. And we're kind of in between these two levels, so it's hard to look at today's low and suggest that yes, this is definitely it's probably a minor level of support and resistance, you could argue, and for that I'm just gonna just reduce the thickness of the level. So yeah, you're looking to sell, Mike. in our opinion, it's a tough market to trade. Now, from a price action perspective, sorry, let me just get up my pen. I prefer to trade the market around this kind of level in here to the upside. So what we're saying is if this market could sort of meander for a little bit, and then we could look at this area just in here for a good opportunity to perhaps take this market back to the 1700 level. That would work well. This price action just today is not great. Of course, it's down to yourself. Of course, I'd prefer it to pull back just a little bit more to the downside. And we've also in a bullish day today. Okay, it's pulling back off its highs, but we are in a bullish environment. But there is the potential for this market to just roll over, perhaps down to the 1530, 1540 levels. So yes, it might constitute a little bit of a rollover to the downside, but maybe not today. Maybe tomorrow, if we get an open and we start seeing some selling coming in, we might get a squeeze further lower. So I don't know if that helps you. The only thing I'd be careful about is maybe around the 1520 level. If some buying comes into this market, you get buyers looking to drive this price to the upside. So it's going to become an out-and-out street fight between buyers and sellers in terms of what happens next. And from a consistency perspective, what we always find is the technicals seem to win out. So what you don't want to be doing is selling going into levels of support. You don't want to be selling just above it, and that's effectively what you would be doing if you're selling at these prices. So but I would concur with you actually, Mike, that there is short term, and I mean over the next day or so, the potential for this market to continue lower. But there's going to be buying coming in at some point, and that level is probably just a little bit lower than where these current prices are. So I don't actually know if that helps you. It's not the best of opportunities to be trading. There's definitely some better probability trade setups out there. I'll get some of these better opportunities just up on screen right now. So we have had this structural failure to the downside. We haven't really seen it in the euro yen. We haven't really seen that same level in the pound yen or actually the dollar yen. In fact, we've seen the dollar just make new highs. And we've just continued to see the pound yen just continue to move sideways along with the gold market. So a little bit of indecision really across the board. So yeah, a little bit of indecision just across the board here. See, that's why we're only prepared to really use this structural low just in here. Again, if I can get my screen back, just these structural lows just sitting in here. So we were wanting to see some continuation, and we got a structural failure to the downside. So it probably gives us a bit of a heads up that we might have peaked for the day. That's the reality of what may have occurred. We certainly don't necessarily want to be taking multiple trades in this market, bearing in mind the move that we've already seen for the day. And if you do get into these markets to the upside, you might just be looking for just a short-term winner. So we'll just monitor this market then for a few more minutes. If you guys have any trades or any comments to make, then don't hesitate. Yeah, a bit of a choppy week last week. We didn't get in terms of number of trades last week. We didn't get into that many. We've had a few winners, a few losers, and overall we were up for the week, but only just marginally. So effectively just a scratch week really last week for the time we committed to these markets. But yeah, don't be surprised if you get a bit of these choppy conditions continuing. We're certainly looking forward to the September, and then the trading conditions from September to certainly November are ordinarily really strong trading conditions. So and that's when we'll be looking to capitalize and make a lot of our money. But for now, we'll just trade the price action, trade the conditions as we see them, and maybe not be too aggressive with the markets during these summer trading sessions. So there's not an awful lot happening in other markets either. Let's have a quick flick through. So I am conscious of the time, guys. I'll just have a quick flick through. So we're getting a strong rejection in the euro dollar off the 17.49. The indecision in the pound dollar, dollar Swiss. Dollar's making a bit of a comeback off this level of support, roughly around the 98.59 level. The dollar CAD, again, a really large sort of bullish spinning top, but very well could be a bit of a long-legged doji candlestick in the dollar CAD market, so beware of that. Some strength coming into the Aussie over and above the US dollar, and more indecision for the New Zealand dollar. So we're getting this narrowing of price action, so it's important to consider that. Not an awful lot in the euro pound. We've looked at these three markets now. You see, and what we're now guarding against, which is why it was worth taking one trade in this market and perhaps not multiple trades, is now this level becomes a level. Now we've had the break to the downside. This is the very real potential in this market where we get this little rollover. So what you don't want to be doing is looking for opportunities to buy a downward moving market. So it's really looking for those structural failures. So if you get these markets moving lower and then they bounce back, they fail to make a new low, it becomes a slightly higher low, then this is a structural failure back to the upside. And under those circumstances, we could look to buy this market again and see if there's enough risk reward to take these markets higher. But we want to guard ourselves against a series of structural failures to the downside. Yes, they are tradable, but no, they are not sort of real significant high probability to them. So we shall wait and see on those. Same with the gold market. Let's have a look at this on a daily time frame. So again, strong indecision. Just over the course of this session, we've had a really strong pullback. We've had a really strong move lower, followed by a really strong pullback. And looking at the US oil, we've retraced all of yesterday's gains completely. A little bit of strength coming in to the US equities, but as you can see, the Nasdaq or the US 100 is certainly struggling to maintain that, and we do have a bit of resistance at the 77.93 in the FTSE market. So I'll be interested to see where this market closes. If it comes back towards the 77.16, then it's a bit. Then the current market conditions in the FTSE remain. And finally, Euro Swiss is looking for like a bit of consolidation going to kick in around these levels. So Not a fantastic number of opportunities for us today, but we shall continue to look for these opportunities, and if they arise, we'll continue to take them. So we want to see these structural failures to the upside now, and with the gold market, we'd like to see these structural failures to the downside once more. That just pretty much wraps up this trading session through YouTube. Now, for those of you that are members of ours, we'll be trading the markets live through the live trade room. So hopefully you can join us through the live trade room now very shortly in the next minute or two. And we can see the dollar yen has just continued to strengthen really. So obviously the better trade would have been in the dollar yen for maybe a sort of 10 pip winner, something like that, up to these levels. It's very likely to squeeze a little bit more, but that was the trade to try and capitalize on the pullback, that pullback trade. Okay, so that's the dollar yen. So that just about concludes then trading the markets live through our YouTube channel. So we do hope you've at least enjoyed it. Okay, we've taken one very, very small 9 pip losing trade. We're not necessarily filled with incredible confidence now to continue to take those buy trades. We don't really feel, it doesn't feel like we have those market conditions that we ordinarily like to trade, but things can obviously change very, very quickly. So we'll see how we get on with those. So do feel free to connect with us through our YouTube channel. If you do subscribe to the channel below, you'll be notified when we go live with our live trade rooms. And also we do produce a daily trade watch video, which is a 5-minute video available every morning, and it gives you a heads up of some of the opportunities that we really look to focus on for the day ahead. So it really assists you with trade selection and that identification of trade opportunities. So hopefully you can subscribe to that. Just click the link below, and you can also connect with us through Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen for you now. Okay, so all that's left for me to do is to thank you very much for joining us. Do read some of the information just below. We are currently offering a 14-day free trial, no obligation of any kind. So if you are interested in our style and our approach and the way we trade these markets and the way we profit from these markets on a consistent basis, whether it's through our daily live trade room or through our capital growth webinars for half an hour every evening, the options are there for you. So 14-day free trial, no commitment of any kind, and if you do decide to join us, the fees involved in retaining your membership are very, very small. So hopefully you'll find that useful for you. So do click on the link and do look into us at TheLiveTradeRoom.com. We'd be more than happy to see you and potentially have you even join us. So from everyone here at the Live Trade Room, do take care, and we look forward to seeing you soon. From everyone here, bye for now.